Good afternoon, everyone. This is Rose with Brooks Price Action team and trade room. So today is March 10th, just about 4 p.m. Eastern time. Market is about to close. Just want to do a quick overview of end of day, or I should say end of day review. All right, so we had I was live in the Brooks price action trade room this morning. I started around 9 a.m. going over the monthly, weekly, daily chart analysis of S&P futures. Uh, so I've had these levels since last week, and the first target for bears was 56.8850, and then I expected them to come down to 91.25, which we tested today, and we're bouncing. So there are buyers there most likely, but tomorrow, if we continue to sell, problem here is that this is a bull trend line. So if we actually would break in, but there could be buyers here, and probably they're going to want to go up a little bit. But remember, this is monthly. Monthly is very bearish, so we could actually continue to come down even if we bounce. So best to look at the weekly here. Okay, so here on the weekly is we had last week closed on its low. Oh, let me turn this off. So last week we actually closed the week on its low, but it had a really large lower wick, and we were actually bouncing from the 50 SMA. This is 20 EMA, that's 50 SMA, that's 100. The light gray is 150 and 200 SMA. This is what Al Brooks uses on his weekly and daily charts. So we are still bullish. Yes, we are pulling back. We have a really broad bull channel. And most likely buyers are around here once again. Bulls wanted to have a double bottom bull flag, but we're now coming down. Could this be now a finally reversal? Could we have a wedge bottom and reversal up? Well, this week started with a sell, major sell. So I mean, the entire day just sold. It was relentless. We had a nice pullback at the end of the day. That is now putting us into trading range. So that's why we're getting that lower wick. But can we continue to sell? We bears eventually want to come down to the close of this bear bar this week, and then open of September 11th week. So we could actually still come down and then reverse back up. If we do get the bulls here, we do have maybe leg one, leg two, leg three, although it's sideways. We might need to pull back before we're selling again. We might need to make a double bottom and then go up. So it's still very bearish. This week started super bearish. Let's see how the daily looks like. Friday was a bull bar closing below its midpoint. Well, I should say midpoint, but I do have an inside bar and a breakout. But this is a false breakout. I expected bulls to actually come down a little bit and then buy and get back in here. Now, what we can do is that we can actually buy and reverse back up here and then maybe sell. So we reach some targets, but eventually market is coming down here to 5,500 to 5,300. 5,300 is coming onto the chart around this trading range. You can see right here, it's a breakout, deep pullback, and breakout again, and pull back. See, this area is attracting the price, and we might actually end up getting down there, making a big double bottom. Now, that's not going to be all that easy to get there, obviously, because we are around the 5,600. We've had a leg one and a leg two, and this is the leg three. So if we do go back up, it's going to be back to 57.42.50 and then further up to 58.08 area. And in fact, let's see, this is a leg pullback. So we might end up actually going and testing this trend line. Now, what will happen is that if we go with several legs up, we're going to try to sell back down here. Now, then we could get this reversal. Not exactly like this, but if we start to, this is a reversal pattern. So we go up, we come down, and then we go up. That will be, you want to see a bunch of bull bars with gaps, and then you want to see actually market, hold on, let me do this a little better. Like here, right, and then you want to see come down here, retest it, and then go up, perhaps even go all the way up here. So that's what bulls want. They probably want to get a breakout, and this is what they want, which is fine, but we have to go sideways first and form some kind of a reversal pattern, trap the bears, and then get above this trend line. This trend line will try to sell a couple of times, but once we start to get above it, I'm going to target this mid range and then further up. So remember, today is only Monday. We'll see how this goes. On the hourly, we have the last week's range, Monday, Tuesday, Wednesday, Thursday, Friday. So we ended up breaking from this trading range. And then I had some targets here, target number 1 and target number 2. Tomorrow we could sell perhaps a little bit more, and then I'd like to see a reversal, or we're going to reverse back up and then come back down. But it's still not a good place to buy. I like to see bears continue to sell and then try to reverse back up. On the Globex, we had the range, Globex range, and here is the first 15-minute bar right there. The first 15-minute bar was a bull bar. Bulls try to close a really nice bar, but it is a trading range bar, okay? So you can see right here, we opened up here, we came down, tested, but this is really a bear flag. In fact, here's a bear flag, and here's another one. When I see wedge top like this, descending, to me, that is a fantastic double top, lower high, and a sell down. So I measured the Globex 15-minute bars range, and I basically plotted a measured move down, and this is what we sold into early on today, and then market went up, and there it is, you get a double top right there and continue to sell, and just drifted down into 2R and 3R targets. So 1, 2, and 3R target, and then we couldn't close below the 3R, a bear body, so that to me is a reversal. A good signal bar, not all that great. I don't trust the pin bars, but decent one, and it's the end of the day, so it's time to reverse this. So around 3:30 p.m., bulls ended up coming into the market. So I'm going to talk about the entries and exits a little bit. Okay, so we have a huge gap down. I had the support here, and then the low of yesterday. We had uh, pretty much a trading range right here, but it is a broad bear channel, so bear swing, bull scalp, right? So you could see right there a falling trend line. By the way, we should put that on the chart because we're going to use that as market starts to reverse. Eventually it will. So you should be able to, there's several of them. I mean, let's see. Wow. It's difficult to do this on a 5-minute chart, but I'm going to do my best. Here we go. You can use that right there. Okay, or so much better right there. So you can see that these trend lines, eventually we're going to go back to them. So the pullbacks are going to be pretty deep for bulls. So bar 1, it's a doji, so probably buyers below, sellers above. Bar 2 is a good inside bar, probably buyers above that bar, but 2-bar trading range. Even though bulls are buying above bar 2, but the problem here is the bar 1 and 2. So you have a trading range right here, and probably the first breakout is going to fail. So I told everybody this morning, you can buy, but you got to expect pullback to the midpoint of the bar 1. Okay, so the midpoint of bar one was right there. So I told everybody that it happens to be also the open of the day. And if we start to close bear bars below the open of the day, we're going to come down and test the bar one low. And anytime we close a bear body below bar one, we're going to keep selling, and you should be looking for a measured move target. So, which I'm going to measure in a minute, but this is the trading range that I was pretty much looking to now sell. I was long, I scalped a little bit. I wasn't very happy with what was happening there. So um, I did exit out, and then I started to sell. This is bar six. I sold underneath bar six. I sold underneath bar is seven, and is market now is going sideways. So this is a bear flag. I'm looking for bulls to try to buy twice and then get trapped. Beautiful bar 12, so you can actually sell below that bar. In fact, you could just put your stop there, and if you sell, this was the target, but really this should have been the target. And you could see bar 45 came down, actually tested, bounced, but nothing's getting above the moving average. But another way you can also sell right there is, or sell is underneath that bar. There is another way you can also find a measured move target, but at this point, my measured move target is right here. So this is really what I was going for. I'm always looking for more from the market, but I know once we come down like this, that's a leg one, pullback, leg two, pullback, leg three. 16 went above 15, so to me that's a pullback, and that's the leg three. Problem here is that pullbacks are generating really good bull closes, but they're not enough to reverse the market. Obviously, we're having a hard time here. So um, bears, on the other hand, you're getting the breakouts, like such as bar 13, taking out the bar 11 low. So the pullback will probably gonna sell right around there. And I did have a sell order. I sold, and I'm targeting this red line, and that's what I got. So market is doing pretty good there, but then you get the really good buy signal bar. So that is 18 bar reversal most likely. That's a 90-minute after the market open, bear sold. So I'm looking for some kind of a reversal. Problem here is that we are now 20 plus bars away from the moving average, and we do have a gap bar. So I am wondering if we can actually buy with 2 legs and 10 bars, or 10 bars, 2 legs. So that's fine, and that's exactly what I did. I bought above bar 18, look for a first leg, but I told everybody we need to pull back because there are sellers stuck underneath bar 17. Most likely they're going to sell the another is here. Let me is there's a resistance there. So they're going to sell that resistance, and that's the first leg pullback. And then they're going to buy again for a second leg to go back up to the moving average. You have 3 bull bars, so high probability of expecting a second leg up to the moving average. But 20 plus bars, I'm still thinking the bears can actually sell it. And here's a trick for you. You can literally tell how the rest of the day after 11:30 will trade by looking at the first hour, first 2 hours, or hour and a half. And you can see small pullback bear trend is trying to form. It's kind of like giving you the idea, is this a parabolic wedge? Is this is you know is this a strong climactic climax sell off? It really is not. It's just coming down, creating a gap. It's coming down, creating a little bit of gap. Okay, now bulls are closing these gaps, but there's still a gap open here. So that right there is your new resistance. Okay, so plot that, and when market gets there with the second leg, we are going to look for sellers, but you're not going to sell until you see strong bear bodies. Bulls try to have bulls had their chance to close above the moving average, but they're failed. So this is basically after a measured move down, you're getting a two-legged pullback, but it's the 20 plus bar to the moving average. Sellers must be there. So it's the first tag and a really good sell bear body. It's time to sell that. So if you do sell, I'm looking for market to come down and test the 22 low. There's a bit of a gap here with bar 19, and the bears try to close the gap. They failed. Now, I don't really count the is I don't really count the wicks. Is bodies need to close and overlap with the bar 18 body. We didn't really overlap. So bulls had a chance to buy again because they're probably stuck above 24. That's high one from the lows and a high two from underneath moving average. They got stuck because this is a very bearish market and the bears looking to sell the pullback. So those bulls are stuck there. They're buying, okay, somewhere around here, and then looking for a break even. So we have calculated that. You could see that they bought the close of 25. If they bought again the 27, that was their give or take break even right there. Now, good for, or you could say the best way to figure that out. Here is bears is selling at the moving average, right? Or selling the close of 26, that's a decent bar, and then coming down is and actually getting some kind of a break even. But the break even really didn't happen for stock bears underneath 17 um, until bar 30 and 31. Now they came very close to the close of 17, which is where they sold. They sold underneath 17 and trap. So they had to wait for bulls to take two legs up, and then they sold underneath 26. So they already averaged in their losses, kind of fixed it, but that's a strong leg down, probably sideways, and one or two more legs expected for bears. So here is the area I'm interested. Here's a tip for you. When a close of a strong bear bar followed by a close of a strong bull bar, okay, right there is is an area that is kind of like a unfinished business. So we're gonna probably gonna come down there and test it several times. So I'm looking for bears to close bear bodies. They're kind of failing with bar 30, 31, 32, 33. Finally, we closed 34, 34 and 35. That's a full break even and then some. So the bears are actually making money again. But we have been pushing down. Bulls want to buy. You have two legs up. Some bulls will start to buy from is underneath, right? These bull bars, right? So I'm thinking maybe 5 point and a quarter buyers will start to come in, and you can see right there they want to overlap with the 18 body, 19 body, 20. They want to get back to the moving average. So they did do their best after leg one, leg two, leg three. That right there is with a gap. Believe it or not, there's two-legged move in there. So it's up on this, down on this, up on this. Okay. If you actually go to a smaller time frame, say 3 minute, okay, is right there. I don't know if I can see. Yeah, up on this, down on this with is 60, up again. Or if you want to make it more interesting, there you go. One, pull back, two. Okay. So you can see they are printing is two-legged. When there's a gap, I count that as two legs in there. So now we reached the moving average. They sold the moving average before and they made a new low, but not with a body, but with a wick. But the one thing that the bears are showing me, this is the last lowest closed bear bar underneath moving average. If we take out its low and its close with a bear body, chances are the pullback, I like to actually sell the pullback. So yes, we're getting bar 36 and 37 pretty strong, but there is another resistance there, right? So here's a balance zone, fake breakout, comes back in, gets a breakout, gets back in. So this is basically a breakout pullback, and I'm looking for a sell. Now, bear's showing me a really good bar, 38. I'm really interested in selling this, but problem here is that you have a trading range. It's kind of trending down, okay? I don't want to sell this low because 38 is now a leg in a trading range. And most likely bulls will buy again because they're probably stuck there or stuck above 36. So they thought that this was the high one, and here's a low one. That's a double top low two. Bear flag, one, two, three. Also wedge bear flag. So they're selling with several legs down, but it's a trading range. Nobody wants to sell bar 38. If you do sell bar 38 close, You should have a sell order underneath that, not at the close. And they trap you, you're going to have to sell again. Bar 39 is an inside bar, not all that great. And bulls are not able to close this gap body. So if the gap bear bars in some kind of a trading range are not closing, so what does that tell you? This is actually trending down. Okay, so if you are in some kind of a trading range trying to get a stop order market. So we are still in a limit order market, but the stop order market started with bar 43, 42, 43, 44. Still, bulls are trapped here. They saw three bull bars back to back. They thought this was a buy to close, but take a look at the upper wicks. That's not all that great. And plus, we're very bearish. So this is always in short. You either sell or you are flat. You should not be looking to buy. So bulls exit probably they scale in. How do they scale in, right? If you counted 5 points there, now you should be counting about 10 points to 20 points. That's a 10 point. They started the buy, and then further down, I think they reached about close to 20 points, just about, but it's not quite. So to me, this was right here, just about 10 points. They started to buy. No bear bars closing after bar 44. So bulls are scaling in, but it's not enough. It needs to overlap with right here with 36 and 37. We're not overlapping. There's actually there are negative gaps here. So if you actually go to the line close chart, you could see the gaps here. You see the negative gaps? We're pulling back and we are we are selling. So we are in a trend now. Okay, market has finally started to gap down once again from the moving average. You have a wedge bear flag, you have a double top bear flag, is lower high, it's coming down. I'm very excited about it. I'm thinking I can actually look for a measured move, right? I'm going for a 2R, I'm going for a 3R, but really what I was mostly interested in is was this measured move. Is up until bar 43, I wasn't sure we would actually get that set up, but we did. So now I'm looking for is I told everybody right before I left around 1:30, I said look for bars to go up, but expect a gap. Okay, is whether it's around here or here, expect a gap to the moving average stay open. That will indicate that relentless selling will start and you're going to get a small pullback bear trend lasting for a couple of hours. So is targets were, there. We had a target there on the weekly. We had targets on the daily. We had targets is on the pretty much every chart we had targets. So it kept coming down and coming down and coming down. Is you cannot really buy this in a small pullback bear trend. Okay, if you want to see the trend is ending, well, first of all, you do have to, see a trend line break, right? This trend line is coming down pretty strong. That's one way, but the most important thing in a small pullback bear trend that I look for bull pressure when a strong bear bodies are actually breached or bulls are closing above, such as bar 38, such as bar 42. Okay, look at this. Bulls are buying. They can't go and even close above 43, let alone 42. Now you have a very strong bear body, 48, right? We're making new lows. So do you see bull bars actually closing and near those opens like 47, 48? Nope. They're making double tops, small bear flags, and they're selling. They're selling underneath bars. They're selling above the pullback bull bars. They're just selling. So you cannot buy anything. Bar 56 is not a good buy signal bar. 57 was one point a really good bar. I actually did buy it. I took profit because we hit this half hour. So I see, okay, bulls might actually go and test the 54 high. But if I don't see any bull bar closing, I'm going to exit out. I ended up exiting underneath bar 58. So bears are selling. Nice inside bar underneath the moving average. That's continuation. And bears kept selling and selling and selling. And so, I mean, we just extended this all the way down here. Good for the bears. Once we reached the measured move, I said, I think we're getting ready to buy finally. So it is time to look for buyers. I thought maybe we could get buyers around bar 60. That did not happen, so I waited a little bit more. Nice, strong bear bars trying to reach some target. Then I'm not interested in exiting out of the shorts until I see a strong bull bar. So finally, we get this is outside up bar, bar 69. It's an engulfing bar. It's engulfing 2.5 bars, right? The half of 66 is 67 and 68 fully is engulfed. So is you can buy is you can put a buy order at the midpoint of 69, buy one tick above, and if you start getting more bars, you should be buying their closes, buy above them. Okay. So my targets were the first of all, I wanted to see this trend line tested for one. So I didn't want to take any profit off the table until I saw it. But my targets were, which I posted on Discord, where let's see, here's a breakout. So really it started with the high of 62. Okay, I was looking for that, and then I believe I this is what I measured, is I wanted to see that, so which I got those two, and it kept going higher. And then the next one was either that strong bear body. Bulls needed to close above it, which they did. They actually closed the second leg up with bar 73, but I was more interested in bar 48. So now we formed a huge trading range. I got this, I got that, and then 74 came down and stopped me. And I'm glad it did because we ended up actually taking out the 73 low. So strong bull leg, first sell and second leg up, or you could say this is a one big leg, that's a pullback, and bulls want to get back up there. But this is where I exited my trade and I was done trading, and I just didn't want to trade any of this anymore. And that's because bulls are probably going to buy and this pullback, right? You have a tight bull channel with a pullback. The first is, breakout bar is of the trend line. Probably buyers will fade bar 75, and they did because they're stuck up here. They were still buying into the 56.42. They were hoping to actually take out the 48, and then the first pullback they wanted to buy and get back and test this bar 38 most likely, or 42, 40, 41 high, 38. So it's a breakout test area, you could see right here. So this area is a complete resistance. But really, if you're buying here, that's because you're stuck here. So you're looking for a break even. So if you are a bull, maybe you bought above it still, or you're holding a runner and you're stuck, and market pulls back about 33% to 50%. This is a 33% pullback. You buy that bar's close, your break even is right there. Or the very first bull bar closing on its side, you buy it, then your target is pretty much right there. You want to average in and get a break in. This is where you fix your trade or whatever the contract you were holding up there. Okay, so that's what you do, but there's not much time. Now, this is a pennant, this is a triangle. We might need to come back down here because it's most likely bear sold the close of the bar and stuck, or we're gonna go up. But tomorrow there's a trading range there. I think market is gonna try to do this, get to that. We'll see, get to that trend line. All right, so we started with a trading range. Is bar one is so buyers below, sellers above. Buyers are bulls are buying the bar one close already. They want to test the bar one high, but this is a limit order market. 2 bar trading range. Sellers above. Okay, so sellers did show up. Bar four. I don't like bar four, but it did close a decent bar right around the open, if not one tick below the open of bar three. So that's probably going to sell. So we're coming down. It's also big gap down. So that's probably looking for a bear flag formation. And micro double top, this is the first bulls got a failed breakout. So think of that as a double top. Believe it or not, that is a double top. Bar one and is bar three high, bar four is micro double top. So bears will try to now sell, and most likely they're going to get a failed breakout. Is bar one and five a failed breakout double bottom? Yeah, so that is failed, but how is that failed? We didn't even test the bar one low. That's okay. Is this a trading range? Is, they're gonna buy and try to break even. Bulls break even, but they cannot close is above the average price. So that means they're definitely in a rush to take profit and exit out. That is a three bar trading that is a three bar bear flag within a trading range. So basically, if you sell below bar six, or if you sell below bar five, you're hoping that we get the bar one low tested and continue to come down. So basically, is my target is right there, and that's my 2R. Stop above 6, and this is what I would go for. So now we're forming another bear flag, and is first sell is from below bar 10. Don't like that. Bulls probably going to have another go, and they did, and they're trapped above bar 11. Bar 12 is fantastic. I'm going to sell. I'm going to put my stop there because we took out the bar 1 low, so that is a qualifying lower high. I'm going to go for 1R, but we couldn't go any further. Now, this is problematic, or if you are still counting is from here, that's your 1R, that's your 2R, you should be using anyway, this one. But anyway, so it is a bear flag, is maybe double top is selling, and you have a spike, you have a pullback, you have a leg one and a leg two and a leg three. So basically, I told everybody, market is going to come back to this area. This is the resistance, and I want to see a double top there. I want to see a micro double top, something, some kind of a double top. But really what I was actually looking for is overlapping with the bar 11 body. So I told everybody, once we start to buy, this is basically a bear flag already sold with 3 legs. It is time to reverse this and look for 2 legs up. So some bulls are already buying and looking for the second leg up, but this is where things get very difficult. If you don't see bull bars closing above the moving average, time to take your profit and expect a double top and a second entry short from the moving average. So that is a double top bear flag with low 2 from underneath 26, and they're selling. So what's your target? Probably the 18 low, 17 low, which we know the bears are stuck there. So here is another 3-bar bear flag. I'm interested in selling. Selling underneath 27 is not okay because, is you're kind of waiting. Yeah, you can sell there, but I rather to sell underneath, trail it up and sell underneath bar 29. So if you do that, okay, because it's too low. If you're selling underneath 27, it's too low. But you can trail your stop order, and stop goes there, or you can put your stop there. That's 1R, again 2R, 3R, 4R, even 5R. Or if you put your stop there, obviously that's where you need to put your stop, right? And you sold underneath bar 29, right? 30 puts you into the trade. So now you're targeting this and then targeting that. And now look at that. We come down and then we bounce. So to me, this was actually a good trade. This is where actually took profit as I kept selling and selling. There's another one right here. Is if you're entering late, there you can take that. I would go for that. So the 1R, 2R, it works. If you put your stop there, you get a nice 1R, but we can close a bear body up until bar 60. But from there on, you do have a double top there anyway. So you have first sell and a second sell. I would probably look for something like this. Underneath bar 60. Hold on, stop goes there. Underneath bar 61. I would enter there. That's the first entry from 58 and the second entry from 61. That's my 1R. That's my 2R. You see how that worked out perfectly before the bulls showed up? So these are flags. You gotta study the flags. But anyway, so here is a much better stop order market. And finally, market got a decent stop order, but it started to accelerate down. But we have come down way, way too much. So you got the measured move from the high and high of bar 3 and a low of 18, and you projected we overshot it, and then you get bar like bar 69. You're done. You got to exit above bar 69. You can actually buy it, but start small, and then you should have a buy order. Is Let's see, have a buy order there.